I've seen you guys doing pretty well, and I wanted to ask a lot about what I was just discussing, which was kind of this volatility, how people freak out when, at least over the last government shutdown, kind of how that affects the markets and mindsets, and how somebody like you guys can really make such a difference in people's lives.
Well, right on. Well, let me kind of tell you my view of the market. The market is a series of overreactions. It's too bullish and it's too bearish over and over and over. Give me a good example here. 2008, we are watching the stock market plummet, and I'm looking at the price of oil. Oil has been pretty stagnant for the last couple decades. Stagnant in the fact that it goes up to 140 and it goes down to 80, but it's in that category. 140 seems high, but it's always in kind of a nice little pattern. It went down to $27 a barrel one particular day. Anybody in the right mind would think we're going to continue using oil. Yes, we'd like to move on to bigger and better things that help our environment, but oil is still a necessity. In your head, aren't you thinking, all right, maybe I buy this at this cheap level? Mm-hmm. Because it's an overreaction. Yes, I know things were getting bad at the time, but you got to keep a calm sense about you and buy these things when you get good sales. Mm-hmm. And that's all we did. I bought it, I think it was $28 a barrel because I didn't catch the perfect bottom, and I wrote it back up to, say, 80 or so. And that's what, investors do. They buy good prices. Instead of being freaked out about what could be, what might happen, what's a good deal right now?
And so I think a lot of what you're saying is, as an investor, or with your investment advice that you guys are giving, and I know you guys don't manage the money,
right?
But it sounds to me like you don't really look at the market as a whole. You're not looking at the Dow and these things. You're trying to pick pieces out of that.
Mm-hmm. Exactly. We're at all-time highs every day, it seems like. So I'm not buying the market. I'm looking for good deals. And for example, I thought oil in the last few days, one of our recent trades at CMI I thought oil was overdone for the last several months, quite frankly, on just a pure supply and demand scenario. And there was a lot of fears that had been baked in with the Syria tensions and the weakening of the dollar. So what I saw was that when it broke $100, we're talking light sweet crude here, that we'd short it. And we jumped in, we shorted it, and made our money and got out. Mm-hmm. And it's just, for us, it was a good deal, and it was the ability to short it when supply and demand started coming back into play.
So that's all, we're talking about a little bit of time ago. Let's get into this government crisis, because we've obviously talked a lot about that on our show. The government crisis, what was going on for the past.
And by the way, I love those.
Yeah, that's what I hear. And, my monologue, I was saying a lot of people are afraid to act in the uncertainty, right? I mean, they get paralyzed by fear of what could happen. And you kind of take a different approach.
Well, in this case, you got to read between the lines. It sounds incredibly insensitive because a lot of people are watching their 401k might take a dip for a few weeks, and they get uncomfortable about that. But remember that when you're watching government officials battle it out, they're actually trying to scare you. That's literally their job. They're trying to create leverage. Let's just say the Republican Congress is saying, hey, we don't mind walking over this debt limit crisis. We don't mind taking it back and seeing what we can get out of this. Well, they're doing that. They're trying to actually create fear so that people will put pressure on the Democrats, and vice versa. President Obama did it. I'm not picking a side here. I'm just telling you, they were actually trying to scare you.
And the news is doing a good job, too.
They're doing a good job. Media is overreacting. They're saying the end of the world is coming, blah, blah, blah. But in this case, this is spiking volatility. It's giving you good deals. You got to find those deals within the markets that you can take advantage of. Mm-hmm. And for us, we actually shorted volatility when it got to its peak.
So then so what does that mean exactly?
Well, there's different
Shorting volatility when it gets to its peak.
You got to become a Common Man Investor subscriber. Well, there's different ways to do it. We just, there's some instruments out there that we took advantage of, and it's part of our strategy, quite frankly. But yeah, we made some good money, and we'll continue to make money off of that.
So as you start to look at these fear-based things, is that one of the items you're looking for as you invest?
Absolutely. If you've ever heard of the VIX is a instrument. It's basically like a thermometer for the markets. Mm-hmm. And the VIX spikes, and they call it the fear factor for a reason. It goes out past 20 when things, people are tentative. They're thinking about possibly pulling their money. What they're doing is they're paying higher premium for protection on their puts. Like, let's say they were up in Apple and they had bought it, when it was down at 400, they're at 500. Well, they're going to buy some protection by buying puts instead of selling their outright position. That drives up the VIX. And, all these people buying protection because the government's scaring the bejeebies out of them. And we know that the volatility and the premium is going to come back out of those as soon as it was resolved. And that's just what we're doing there.
So as you start to help people, and the name of your company is Common Man Investor, this seems to be a lot of kind of the, behind the curtain of Wall Street.
Sure. Well, I'll put it this way. We have a lot of subscribers. They're making their very first trade. And I tried to break it down into the very simplest of forms so that it can literally, we named our company Common Man for a reason. We want everybody to be able to do this. There's certain things out there. They're not tricks. They're not, gimmicks. They're just ways to make money off the market, and high and low, in volatility and none. And what we're doing is we're just trying to break it down and make it as simple as everybody, for anyone to understand it.
See, it's kind of interesting because you say make money on highs and lows. Mm-hmm. That's really what investing is, where I feel like a lot of people with their 401ks or their IRAs, it's more of a sexy savings plan really than investing. And do you think those two words are are misconstrued a little bit, the difference between investing and saving?
No, because technically when you're investing, you're saving money to the side. The only and I wholeheartedly, I don't want to get away from that. I want to encourage people to have a financial advisor, to go out and invest a good portion of their monthly salaries, in their 401ks, their Roth, their IRA. I really believe they should do that. If they want to add additional income, possibly, if they have some money for, I like to call it a rainy day fund. Let's say it's 10% of their portfolio that they have sitting on the side that they don't want to lock up for 10 years, and they want to put that to work. That's kind of our niche. And they would subscribe to us, open a brokerage account on their own, and invest
like
if they want to.
Like E-Trade or whatever.
Yeah, E-Trade or whatever brokerage they choose. And then they could follow our trades. Basically how it works is that, they would subscribe, and they would be...
How do you subscribe before?
Oh, via our website, commonmaninvestor.com. There's a subscribe button on there, and everything's done via email. I sent them out a 16-page Bible is what I call it. And this gives them our exact strategy on how we go about creating our gains. And, I can't give all the details away, but basically it's about hitting singles and reinvesting and taking advantage of some of these, market conditions.
Mm-hmm. So continue then. So somebody can subscribe, and they start to get some insight as to, as you say, the fear factors and what maybe to do with those things.
Yeah, absolutely. And when they're doing this, they also have me. I'm not, I don't have the IQ of 1,000, but I will say this. There's some tricks and some things that I've learned over the years, and if they don't understand it, they can always just ask me. And, for example, yesterday we had I shot out a newsletter where we shorted oil through an ETF called SCO. We had to buy it outright because the ETF shorted oil for us. Some people got confused and thought I was shorting the ETF. They shot me an email, say, hey, could you clarify this? Boom. Easy enough. We did it. And then they made money off the deal. But they didn't understand. They just asked me the question, and I gave the answer. Not that I'm brilliant. I don't want to make it sound like that.
No simpler way than that, right?
I just want to mean that there's 100% clarification, and they can always find out
the answer. Then they got an answer. I love it. I love it. So when you start looking at some of the other things that are going on out there, you mentioned how we seem to get at market highs, the Dow, all the indexes. Here we are, new record-breaking highs. It happens. It seems all the time now.
Right. There's this term that I love to hear, and I hear it on CNBC a lot, and it's called, this is a stock picker's market. It's always a stock picker's market. I don't care if you're at the bottom doldrums and it's, we're making all-time lows or we're all-time highs. It's always a stock picker market. Or somewhere in the middle. Yeah. It doesn't matter, and we are making all-time highs. What does that mean? Don't buy overbought stocks. Netflix had made a crazy run to, I want to say they just touched 400 after earnings in the after hours. You don't chase that stock. I don't care what your feelings are about the company or their service or what. You don't chase a company that's just made 25% in the last 3 days. It's silly.
You already missed that bus.
You missed that bus. Walk on to another. And those are the kinds of things when you talk about market tops that happen. You don't buy that stock. You pick a stock like oil and you short it if you think it's going down. And I'm oversimplifying a little bit, but you can kind of understand it that it's always a stock picker's market. There's always going to be a better deal out there, like Bank of America. They're trading at like 3 times earnings. That's a better deal than Netflix. I'm just saying.
When you start working with people and they start subscribing, you said a lot of people, it's kind of like their first trade. Maybe it's their first time going away or taking that 10%, as you say, from their financial planner. Again, we're here with David Myers with Common Man Investor. They start going away from it. As they start to take that money and whether they, however they're making these first trades,
Right.
How do people work with you on that first trade? Because, a lot of people have never had their guy, their stockbroker guy, right? A lot of people have been pushed into, and I mean, quite frankly, I think most people have bought into, what is it? The market diversification. And that's all they want to do. And they get hammered with that and hammered with that. And now this is a little bit, outside the box in some ways.
Yeah, very outside the box, I'll admit. Well, in this case, there's a lot of situations, and everything's different. If I get some guys that are brand new, have never made a trade in their life, if they ask, I'll be happy to, over the phone with them, say the buttons they need to click, if that's the trade they make.
Right.
It's literally, I've done that multiple times. I don't tell them to do this. I tell them the trade that I've made, feel free to follow. Here are the buttons that you need to click if you want to follow. And they make those choices on their own, but I walk them right through their first trade many a times.